All right, thank you all for being here with us today, and thank you especially to the students who are visiting us from Chicago's Harris School. You guys have a great agenda in DC. We're very glad you could include us in that agenda, and we hope that this event is instructive to you guys as you plan your careers going forward and remind us of what it was like back when we were students at the University of Chicago. My name is Andrew Kurtzman. I'm a member of the governing committee of the Chicago Economic Society here in Washington, DC. It's a great pleasure to be hosting you today at the International Monetary Fund. As you're aware, we'll be discussing today the role of the special drawing right, which is the IMF's unit of account, and in some people's conceptions, a currency of emerging global significance. The questions that we discuss today will be about the past, present, and future of the special drawing right. We'll be addressing questions such as the role of the IMF and the SDR in global financial crises, past and future. We'll be considering the role of the SDR potentially as a replacement to the United States dollar as global reserve currency. And we'll be talking about the future of Chinese monetary policy with respect to the special drawing right and potential market reforms to China. Before I introduce the panel for today, I'd like to make a brief announcement about the Chicago Economic Society, which I'll introduce and then introduce you to the global chair of the Chicago Economic Society. So over the past 3 years since 2012, the Chicago Economic Society has been the only global alumni group focused on economics at the University of Chicago. We've hosted 18 events around the world, from Hong Kong to South America to here in Washington, DC, many of which have featured some of the most prominent intellectuals who are graduates of the university, including several Nobel Prize winners. This event is, I think, our most unusual event, which is a lunchtime event in the middle of the day, and the turnout speaks to the interest of this community in topics of global significance and global economic significance like this. So thank you again so much for being with us. I'd like to introduce you to Kevin Cheng, who is the chair of the global chapter of the Chicago Economic Society.
So, good afternoon and welcome to the first event of the Chicago Economic Society in 2016. First, I would like to thank Andrew for coordinating and hosting this event, and many other volunteers who have helped out for today's event. As usual, before the event, I would like to give an introduction and a short update of the Chicago Economic Society, or the CES. For those of you new to us, the CES is the first global University of Chicago alumni group devoted to economics. It was born right here in this conference hall on November 13, 2012. And on that day, we are very, very privileged to have Dr. Siddharth Tiwari inaugurating the CES globally with a discussion on the IMF and the global economy. Ever since then, the CES has expanded not just in Washington, D.C., but also in Hong Kong, in Singapore, and most recently in Lima, Peru. So far, we have organized 18 events hosting 3 Nobel laureates, a number of very distinguished Chicago faculty members, business leaders, as well as senior officials from governments and international organizations. And yes, this event is event number 19 globally. So for example, in our event in Peru, we launched our first chapter in Latin America during the 2015 IMF annual meetings with distinguished speakers such as Augustin Costa, Jacob Franco, Arno Haberger, Siddharth Tiwari, and Kenneth Miranda. Also, we work closely with the many different branches of the university, including the Becker-Friedman Institute, the Division of Social Sciences, the Business School, and the Alumni Association. And today, we are beginning a new partnership with the Harris School of the Public Policy. And the school has graciously sponsored 26 students who happens to be in Washington, D.C., and to attend our event today. So a special welcome to all of you. To celebrate our 3rd birthday, we have recently published our first global newsletter. And this beautiful newsletter, our first 3 years. It has over 100 pictures, and it documented the accomplishment that we have made over the last 3 years. And you can download this on the link over there, or you can find the link in our Facebook group. Going forward, we will continue to expand globally. Our next 3 destinations will be Mexico City, Beijing, and New Delhi. But we are not forgetting Washington, D.C., because here is our home base, and here is our founding chapter. So this year, we'll continue to host some mega dinner event with 300-400 people like you see last year, but we also would have different variety of formats, like this one, a luncheon event with some smaller group of people. Last but not least, before I go, I would like to ask some of you to join the CES, not just to attend the event, but to join us in helping us organize and strategize our next events. We do already have some very dedicated and capable volunteers working with us at the CES, but we need more because of our expanding work program. Now, working with the CES is pretty rewarding, although we do not pay. And it should be pretty good for your spirit, and also not only because you're doing something for the university, but you're also doing something good for the public as we try to educate economics and promote it to the public awareness. And along the way, you're probably going to meet some very interesting people. So hope you can join us, and if you want to join us, please email us at the email address up there. Now, with that being said, let me now give the podium back to Andrew.
Thank you very much, Kevin. And for those of you who may be joining us in DC after you graduate from the Harris School, the CES has members from virtually every government agency in DC and international organizations such as the IMF and the World Bank. Very happy to be here for you, to introduce you to the city and to help the early stage of your career development. So for today, we have a wonderful guest with us today to introduce the event, who's uniquely qualified on the subject of special drawing rights. Before I introduce Siddharth, the discussion will go until about 1:20 p.m., at which point we'll have up to 40 minutes of question and answer. If you need to leave early, we understand, won't be offended, but we hope you'll stay with us. We have some special prizes for those of you who ask good, tough questions early on to our panel. Siddharth Tiwari is the Director of Strategy Policy and the Review Department at the IMF. In this role, he develops IMF policies and oversees the application of these policies at the country level throughout the world. Prior to this, Siddharth has had a long and varied career at the IMF, working across the organization. He was Secretary of the Fund, Director of the Office of Budget and Planning, and headed country operations in Africa. In many of these roles, he has seen special drawing rights develop, seen the policies related to special drawing rights develop, and will be able to give us unique insight into his vision of the present and future of special drawing rights before he introduces us to the panel discussing the event today. So thank you very much for being with us, Siddharth.
Okay, I'll be quick so that the panel can get on. It's a pleasure to welcome you here, and I say this as a Harris alum as well as an economics alum from Chicago. So welcome, especially the students who are here. And thanks to many of the volunteers, the society has grown from a handful volunteers to events over 400-500 people in packed halls, and it's been an amazing success over the years. The topic today on the special drawing rights is an important topic. It's core to the operations of the IMF. This particular year was a review of the SDR basket at the IMF. It happens every 5 years. And for the first time in the history of the IMF, the basket was expanded. So just going through the history, it started at 20, then went down to 5. When the euro was formed, it went down to 4. And the renminbi was added, the Chinese currency was added this year as the 5th currency. There are two fairly simple criteria. They're hard to interpret, but they're simple. One is a gateway criteria that the country has to have weight in the global economy, and that weight is measured by trade. The second is that the currency has to be widely used for transactions globally. It's a loose definition of a freely usable currency. We have two Chicago alumni here who have been at the forefront of work in this area. Tom Krueger, who is Deputy Director in the Finance Department, who played a key role in the review, and the review wouldn't have been completed without Tom's efforts, and Warren Coates from Chicago, who over the last few decades has pushed us and pushed the boundaries on how the SDR could be used in various facets. Moderator is Pedro de Costa. Thank you, Pedro, for doing it. I know you've put some effort into it. But since you've moderated some of our previous sessions, you know exactly how this goes. So I'm going to stop here, and would you please take the floor?
Well, thank you guys so much for joining us, and excited to be discussing, what seems like an ethereal topic, but turns out to be fairly relevant to international economic affairs. And wonderful to have two distinguished guests here. And I wanted to start, since we've already heard a little bit of their background, I wanted them to just tell us about, one, how they became involved with SDRs, and two, what you think is the most useful purpose that they can play in the international financial system today. Let's start with you, Dr. Krueger.
Okay, thank you very much. It's a pleasure to be here. I also want to say from the outset that I speak in my personal capacity, so anything I may say shouldn't be held against the IMF. Just in terms of background, so I worked mostly in area departments and in the research department until the global crisis erupted. And then I moved to the finance department, and I got involved in SDR issues really there for the first time at the IMF. And this was in particular in the response, as part of the response to the global crisis, there was a sizable allocation done in 2009, roughly a 10-fold increase in the SDRs outstanding. So that was the first time I think we really, from my side, I really thought about what could be the role of the SDRs. I think in some ways it was probably an illustration. You need particular strains in the global economy to move, to have reforms, to have substantive changes. And I think for me this today is actually a nice setting. I mean, are we again at such a time here where you have in the global economy various challenges? It's also increasingly recognized accumulating foreign exchange reserves. Dollars is very costly for the countries who do it. It's costly for the international monetary system, the global imbalances that it creates. So I think given these challenges and now the low growth, the risks that many emerging markets face, I think it's a good time to think again, is there a larger role for the SDR in the international monetary system? I think, contrary possibly to Warren, I will be a bit more skeptical. So I think later on we may want to discuss some ideas that I think are feasible within we have the Articles of Agreement. They are very difficult to change. That will increase the role, but probably I'm in the end still very skeptical that you can have a very large role for the SDR. The second thing is what Siddharth Tiwari already alluded to. The SDR comprises a basket of currency. That's how its value is currently determined. So I think I was part, and Siddharth led this review team on the SDR where the RMB joined. And I think it's probably also interesting to think more, what with the RMB joining the SDR basket, does that have an impact on its role in the future?
Absolutely. We'll definitely be focusing on that. I guess we're going to have the difference between the view of a sitting official as opposed to the view of a former official who can perhaps be a little bit more blue sky about his thinking as to how far we could take it. So could you?
Hopefully that'll make it
Absolutely.
more interesting.
Absolutely.
I wanted to mention also that there are a bunch of seats up here. If those of you at the back of the room wanted to move up, you're welcome.
Feel free.
I retired from, after 26 years at the IMF 12 years ago or so. So I don't have to give the disclaimer anymore. I can, I'm speaking my own mind. For 7 or 8 of those years, I was chief of the operations division for SDRs and administered accounts, to give the entire title. And that's the genesis of my interest in the SDR. Unlike Tom's experience, there were no allocations whatsoever the entire time I was chief of the operations division. So we poured our minds and hearts and souls into thinking about how best to promote the use of the SDR in the absence of an allocation. The articles commit member countries to making the SDR the primary reserve asset, and obviously nobody's paid the slightest attention to that because it's totally unimportant except for the operations of the fund, where in fact it's quite useful in that regard. But it plays zero role as an international reserve asset, really. In thinking about whether it's really important or not to try and give more momentum toward making it even an important international reserve asset, if not the most important. The reasons that it is important, in my view, are, first of all, that the SDR, the value of the SDR as a unit of account is more stable than any single currency. The exchange rate between the dollar and the euro has varied in the last decade more than 40%. Clearly that does not promote international trade. It's an uncertainty, a cost in trade, and the SDR provides an alternative, more stable unit that would be highly useful in denominating globally traded commodities, for example. If oil were priced in SDRs and the SDR price of oil went up, you'd have greater confidence that the price of oil went up, not that the price of the dollar went down. So not only is that useful in its own right, but it also is one of many elements that would contribute to and promote the wider use and development of the SDR. And I want to, well, there are 2 other quick reasons why it would be important, and Tom mentioned one, which is that for countries to accumulate international reserves in a national currency, like the US dollar, it implies and requires a balance of payments deficit on the US part. So reserve accumulation of national currencies is disequilibrating, destabilizing, or, well, that might be slightly too strong, but it requires and creates imbalances between countries. And this is perhaps one of the reasons that Ben Bernanke, I think in this room or in the next one, in the last year or somewhere around here, stated that while in the past there had been a net benefit to the U.S. in the use of its currency internationally as a reserve currency, now the costs and benefits were balanced or better balanced.
After retirement, because I can only imagine the market's reaction if he had said it.
Right. Yes, it was after he had retired. But it's an important element of discussing the topic with the United States. It is no longer obvious that they enjoy any particular benefit. In fact, they enjoy costs in the form of offshoring manufacturing as a result of the need to maintain a balance of payments deficit.
There was a second one
There was. Let me see if I can remember what it was. The second one is that the United States itself has failed for several decades to address staggering unfunded liabilities, which, if they do not one of these days get around to addressing one way or another, will create a debt crisis for the dollar. So it is not beyond possibility of a global crisis emanating from that, a flee from the dollar, et cetera, which is a huge risk of the existing system, although it's exactly the kind of international event that would catapult the SDR into its destined role.
Yeah. Go ahead.
Okay.
I wanted to ask you a little bit about the history, but go ahead, talk about the current context.
Okay, I want to touch on the practical, and then maybe not quite so practical, things that could be done to help promote the SDR into this role as an internationally issued reserve currency to replace nationally issued reserve currencies. The most obvious, in a way easiest, but most fundamental, is to encourage and promote the development of private SDRs. The dollar enjoys its reserve currency status for a number of reasons: the size of the U.S. economy, relative stability, et cetera. But one is the most extensively developed private financial infrastructure in dollars, all kinds of dollar instruments and so on. That's critical
So
to
you're
the.
talking about these would be bank-issued SDRs?
Yes.
Yeah, banks
Yes.
themselves would issue SDRs.
Right.
Okay.
And I have particularly urged the Chinese, having just launched their Asian Infrastructure Investment Bank, and who chose, regrettably in my view, to denominate its activities in US dollars, to denominate them in SDRs instead. The IMF, after all, operates on an SDR basis. All of the development banks ought to, and the Chinese certainly should be at the forefront because they now have a great interest and stake in promoting the SDR. And what I mean, not only making the unit of account of the IAB SDRs, but to actually disperse their loans in SDRs. These are not the official SDR issued by the fund. These are private SDRs, SDR denominated accounts at banks.
Let me just cut you off.
Sure.
Before we get to what we should do now, I want you to,
Okay.
especially since you've been involved in this issue for so long, I want you to explain to our audience, not all of whom, and maybe not most of whom are not economists, just to explain to them conceptually how the SDR came about and how it's evolved in terms of its role. Now, I want to read the definition that the fund has, which I think is pretty concise, but still it's fairly ethereal. The SDI is neither a currency nor a claim on the IMF, rather is a potential claim on the freely usable currencies of IMF members. So could you talk about the inception of the SDR and how its use came to evolve over time?
I can and will if Tom doesn't wish to take that, since you're the active guy at the fund.
Oh, you can go ahead, and then I supplement.
Okay.
It's fine.
When the SDR was created, the dollar was still fixed to gold. So one SDR was valued at $1, whose value was fixed to gold. It was only a couple of years when all of that fell apart, and the second amendments to the articles then significantly changed how the fund operated and its rules and so on. The SDR then became a basket. I thought it was 16 currencies, but you said 20. Maybe it was 20, but it was a large number of currencies, and that was then subsequently reduced. But from the Second Amendment, which is what acknowledged the end of the gold standard, the purpose of the SDR was to supplement, at a minimum, if not ultimately replace, nationally issued reserve currencies. And that has the benefits that I enumerated earlier.
And has that changed over time in any way? I mean, can you talk a little bit about the crisis issue, the crisis-related emissions, and how that was a different, because that seemed to have happened in a different context than the previous two rounds, right?
Okay, maybe just before I get there, just a few things on the rules, and I mean, you already read it out. Notwithstanding this very nice picture, in some ways, I would say nobody has ever seen an SDR. So it is a virtual, it is an early case of a virtual currency. SDRs, when they are issued, they are allocated to members, to IMF members in the SDR department, that is all IMF members, and they are allocated in proportion to their quotas. So the US gets the most and so on. I think that will be important later on when we think, you know, how does this system actually work? You cannot use SDRs directly, but they give you, for most purposes, but they give you a right to exchange into a freely usable currency, as your quote also said. So you can change the SDRs when you need them, for example, to pay imports. You can get dollars in exchange for the SDRs. Now, there was originally in '69, as Warren also said, there was when it was created, a reason was there was a worry about global liquidity. There isn't sufficient foreign exchange assets around. And this again came to the fore during the global crisis. I think in particular the G20 took the lead at the time how to respond and stabilize the system.
And even today with the recent capital outflows from emerging markets, there's a lot of focus on
Correct. I think
right?
that is now resurfacing again with sort of renewed tension. So, but maybe the 2009 might help briefly to explain also some of the problems. So there was agreement to have a big SDR allocation as part of a package. It was $250 billion. As I said,
which, as you said, was 10 times the previous allocation.
Yes, so of the currently we have about 204 billion SDRs, so less than $300 billion in SDRs are actually out there, and 180 some of were created in 2009. So the vast majority.
It's 10 times all previous allocations combined.
Yeah. But what happened then, so the idea was this would help countries really because it provides reserve assets to the member countries during the crisis. In effect, very few countries used much of the SDR. So in the initial 6 months, roughly 3 billion of that SDR was only really used. In other words, exchanged for a currency.
Did that come as a surprise to you guys? Did you expect
it came a bit as a surprise, but I think looking back, probably it shouldn't, because it is actually it isn't a currency you can use straight out. Right. So there are restrictions. You can only also exchange
There's
it.
a liquidity restraint by definition, right?
So yeah, yes. But this being said, I still think it played a useful role because the headline reserves, I mean, this was potentially something low-income countries, other countries could use. And for low-income countries, those from in the fund, it's almost 10% of their FX reserves in 2009. So it's not a small number for those countries. Would it be
comparable to something like a standby IMF facility where it's like you're not really tapping it, but investors are happy to know it's there? Sort of thing?
Maybe to a precautionary, it's a right that you can use, but you are also getting at another issue. It's an unconditional right. So if South Africa wants to pay for more inputs, it can draw on its SDRs. But it doesn't require that country to make any policy adjustments. So I think that
they
is.
don't have to go into a deficit. And so
yeah, or you don't have to.
Money or whatever.
If it is appropriate, for example, to tighten fiscal policy or do other policy adjustments, that is often a worry against more issuance of SDRs, that it gives countries sort of unconditional liquidity and it may delay potentially policy adjustments.
I would like to correct one impression you might have gotten. SDRs can be used directly. They do not have to be exchanged for currency to make a payment. In fact, payment of charges to the fund on fund programs must be in SDRs. They're not converted into a currency. You just pay SDRs. The reason they are most often converted into currencies is that the recipient doesn't particularly want to get SDRs. And that's a part of the issue of how broader use and demand for them could be looked at and addressed.
So your point is if there were private issuance, that would create this sort of liquidity.
It would help enormously.
That would make it more attractive for people to hold this.
Right. If you priced oil internationally in SDRs, the default settlement currency would be SDRs. You might still settle in dollars, euros, or something else, but the default currency would be SDRs. It would give a little impetus for people to have the SDRs with which to pay them. But these are private transactions, so these would have to be private SDRs, not the one allocated by the IMF.
Can we talk a little bit about China's accession into the basket? It seemed like a pretty significant event, both economically and politically. I think China fought pretty hard to get in there. There was also mixed commentary about the sort of what led to the inclusion of China. There was a sense that at least the IMF's message was that, look, this is a country that's been liberalizing its capital account for years, and it's been slowly, gradually moving toward a more flexible exchange rate, and this is a way to recognize that. But there was a more cynical view that this was, just that here's Chinese power, and now they're creating a sort of rival IMF, which is the AIIB, and so we need to pull them into the fold. Could you talk a little bit about, either of you guys, about what it means for the SDR itself and the fund to have China in the fold, and what it means for China potentially to be part of the group?
Okay, maybe I start out and Warren can also chime in. I mean, first of all, I think as Mr. Tiwari explained, the IMF has a framework for looking at whether currencies meet criteria and qualify, so to speak, for the basket inclusion. And that has been in place for quite a long time. And so it was within that existing framework that we looked at, that our board looked at whether the renminbi qualified. There are two key criteria. So one is, as Siddharth said, you have to be among the largest exporters. China, this is a quantitative, straightforward criteria, and China met that already in 2000, at the previous review in 2010, clearly meets that now. The second one is a currency freely, what we call freely usable. And that is an operational concept we mentioned already. The SDRs gives you the right to get a freely usable currency. So, and that is defined in the IMF's article. It says it's a currency that is widely, in fact, widely used to make international payments and widely traded in the principal exchange markets. So the review very much focused, does the renminbi meet those criteria? And as you said, I think there have been a lot of reform steps the Chinese have taken to gradually liberalize the capital account, FDI flows. China also has, for all official sector, SDR holders, for example, all their transactions are unrestricted now in terms of domestic bond markets, in terms of exchange markets. So in our board judgment, and that led to a much more widely used and widely traded RMB, China, the currency met those criteria. And I think in the end, this was probably a good outcome of the review, both for China. I think it was an important signal. They arrived, their currency. It was done within a framework. It was not tailored to China.
Yeah.
We have that framework. We used it before. But also for the IMS, I think having a major emerging market currency that has these attributes in the basket, I think is good. And it
Kind of catching up with the reality that's been in place for a while, right? Which is
yeah,
emerging economies
but I
have
think
become a greater.
in some areas, it takes us longer to catch up. I think here it was reasonably timely, I think, because clearly 5 years before, when we looked at it, there was essentially no trading in RMB, and now that is quite different. This does not, maybe one more point, mean that there are no capital account restrictions. Clearly there are, the RMB. We also see often there are quite some wedges between the offshore rate, let's say in Hong Kong, and the rate. So there are capital account restrictions, but that's not a criterion. And we have had currencies in the basket with capital account restrictions also before.
I agree very much with all of that. It was very important for the integrity of the IMF review process, and it was carried out meticulously. So that's a very positive aspect of this. It was very important for those Chinese officials who wished to use the carrot of inclusion in the basket to drive the pace a bit of liberalization within China. So these are all very important political things. There's no economic importance to it.
And so what would make it economically important in the sense of advancing what you see as a greater role for SDRs? It would just have to be private issuance, for instance, further expansion of the basket to include a larger number of countries. Would that help universalize its use?
The two major reforms that I have been proposing, first, the development of the private market in SDRs is just facilitating. It's sort of a necessary element of broad use of a new currency. You know, it's sometimes helpful to think about the Bitcoin, which I generally try not to think about, but
I was going to ask you, when you said virtual currency, of course, I think that's what comes to mind for everybody, right?
That's right. I mean, why do most people who receive Bitcoins convert them into currency? You know, because it's very unstable. Nobody really wants, aside from speculators, really want to hold on to it. And that's very similar with the SDR. You know, you can pay for things in Bitcoin if you find someone who wants to take them. But most people who take them will immediately convert them into dollars or something else. It's very, very similar in terms of what's required actually to grow the demand, the genuine, stable demand for SDRs as a world currency. So the private thing, and this is exactly what the European Commission did preliminary to the euro, of developing a private market in ECU, which was the basket before the euro. So it's a well known process.
Let me ask you this, though. In an American political context, the first thing I think about when you talk about internationalization and you know, that word right there, I think about, you know, the UN is taking over the United States, and we're giving away our sovereignty to foreign countries. How would you, I mean, if you can't even get the Republican Party to fund the IMF, how do you get them to think about an SDR currency proposal that goes anything beyond the current
Finally, they did. So ultimately, there's hope for rationality. The argument is, and this is what I had in mind in referring to Ben Bernanke's comment, the U.S. surrenders sovereignty and should surrender sovereignty whenever it's in the national interest of the United States to do so. And I'm arguing that it is in the national interest of the United States to replace, to the largest extent possible, the use of its currency as an international reserve asset with an internationally issued reserve asset. It's in the interest of the stability of the entire system, but it's in the specific interest of the United States as well. Very quickly, the two other big reforms that I would make, because we keep talking about should we add more currencies and whatnot, ultimately, if the SDR fulfills all of its hopes and becomes the exclusive international reserve asset, it makes no sense having a currency basket at all. The currencies should be, the valuation basket should not be a currency basket. It should be a goods and services basket, something that, you know, the gold standard was a commodity basket of one commodity. That's not a terribly good system. But expanding that into a basket of a bunch of commodities is better, but a basket of internationally traded so that there are good market prices on a continuous basis of a dozen, 50, 100 goods that are indicative of, you know, it's a global CPI, et cetera. That's what you'd really like the unit to be most stable in reference to.
Wouldn't the same Ben Bernanke, I want to ask you about the sort of the reforms that you think might be useful, but wouldn't the same Ben Bernanke think that by doing so you're also restricting, you're tying your Fed's hand in terms of monetary policy?
Only if the Fed, in its great wisdom, would decide to fix the US dollar to the SDR, which is something ultimately I think they should do. But that's a sovereign decision on the part of the US. One other thing I want to be sure I inject into the discussion, Tom mentioned the allocation process that now exists. And let me elaborate just slightly on the problems that arise because of it. When there's an allocation, every country gets SDRs on their books in proportion to their quota. There's no way on earth that even comes close to matching the distribution of reserve demand. Even if you have exactly the right amount to augment the supply, it's just not distributed in a way that matches the distribution of the demand for reserves in the world. I would replace the allocation process with the issuance of SDRs under currency board rules.
Currency board rules are fairly restrictive, though, and that again speaks.
They're terribly restrictive. I mean, it's a gold standard setup. It's a gold standard regime.
But hasn't the crisis taught us that we need more monetary flexibility in hard times and not?
That's not what it taught me, but
okay. I think Ben Bernanke would be on that side of the coin. But anyway, let me turn to you, Dr. Krueger. I just wanted to ask you, what do you think are some of the more potentially realistic or inside the beltway, if I might call them that, reforms that are within reach for SDRs?
Okay, maybe just one I think very positive point on what Warren was saying. I think ultimately, if you want to have a fundamentally different role of the SDR in the global financial system and more that central role, you need a very different SDR.
Yeah.
So, and And some of these ideas, I think like Warren describes, they clearly would get you there. How realistic it is, I think, is a second. What I maybe just want to spend 2 or 3 minutes at least on some ideas that I think can be done within maybe the political constraints that I'm seeing. Changes to the SDR require an 85% majority to allocations. That's a big hurdle in the Board of Governors. So I think maybe there are sort of 2 or 3 key things I think one can do within the current system. One is we need more SDRs. I think simply the size of SDRs outstanding is not enough. They are roughly 2.5% of global reserves. I think if you allocated, I don't know, let's say 120 billion per annum, and if you have a Board of Governors saying that is what we plan to do, I think a reasonable expectation, that would really change also how people look at the SDR. It doesn't go after the issue who gets the SDR, the allocation. I think that is not doable without a change in the articles. But there are things, once you have the SDR allocated, the official sector actually can do a lot with the SDRs. And I think one example is you can pool your SDRs. So the large holders, the US, the G7, the Chinas, they could pool their SDRs and use them for liquidity support.
Instead of having, say, Forex swaps with the Fed, for instance.
Exactly. Or, for example, one issue at the IMF, we provide for gold standard countries, like we provide so-called FCLs, those are credit lines. In case these countries ever need money, they can draw them. It's like an insurance instrument. They have never been used, but they tie up a lot of our liquidity. It's more than half of our current commitments at the IMF. If you were putting these SDRs into a pool and say, if there were ever a drawing on those, it's very unlikely, but we finance them from that pool, that would free up a considerable part of the fund's liquidity for other operations. And overall, it's very difficult to increase the fund's liquidity, as we have seen in the past. So I think this could be a way, using the SDRs that are allocated in a different way and in a more proactive way, that actually increases the global firewall and helps the international monetary system.
Just to add to that, because I think they are important points, that within the existing framework, the existing articles, etc., there really is quite a lot that can be done, such as the suggestions you're making, the development of private SDRs, etc. The only thing that holds it back is political will, political commitment by the fund's members. None of these things require any change in the articles at all. And perhaps with China's new interest by being added to the basket, etc., perhaps more political interest will be generated, and the fund will actually, the fund can do all of these things, but it really can't do any of them unless there's political will behind them to support it.
So why not have just larger emissions by the fund itself? I mean, because of the lack of, that's a political impediment?
Because, first of all, I don't oppose them. I mean, in the beginning, I think SDRs were about 4% of international reserves. And now they're less, even though
it was about 10. Actually.
Was it?
Yeah,
okay.
in the early 70s.
So it shrunk in terms of relative terms. So I'm in favor of doing those things, but the problem created by this allocative mechanism is that because supply doesn't match demand, they have to be accompanied with administrative rules about how and when you can use them and so on. That's necessary given this way of creating them, but it's a serious impediment to the attractiveness of the SDR.
In the mechanism.
Yeah.
So I think we're going to turn to questions soon, but I want to ask you guys one last bonus question, which is, how would IMF economists feel if they woke up this week and they got paid in SDRs?
That's a dirty question. It's like asking if they want Bitcoin.
Depends on the day. I mean, Bitcoin.
That's right.
She got in early.
Yeah, yeah.
How would you feel?
Actually,
Would you go to the HR office and say, hey
I
guys,
haven't thought about this. I would probably exchange it pretty quickly for a freely usable currency. But it's
now,
also,
would you go for euros or dollars?
But sorry, I mean more seriously. One thing is in what currency do you spend? Do your spending in?
Yes.
Right.
So I'm living here,
would go
obviously
for
in
dollars.
Washington, so I probably care about the dollars. But if I'm, for example, a retiree and I were living sometimes here, sometimes there, I might actually want to spread and
You might do a Forex play in your...
and that is actually possible in some ways to have a currency combination in your pension in the IMF.
Interesting.
In case anybody wants to join the IMF of the Harris School.
I'm glad, excuse me, glad you raised that question actually, because you know it has always been an issue for fund staff, most of whom come from abroad, of what to do with their pensions. You know, whether they will live here afterward,
yeah.
whether they will go home. So there are various provisions where they can choose different currencies. I don't remember the details anymore, but it's a real issue.
The SDR-based 401k.
So I can easily imagine. I think of Israel back when inflation was higher. All transactions were in shekel, but nobody saved in shekel. Everybody saved in U.S. dollars. I can imagine the same sort of thing. You're paid in SDRs. Okay, well you keep it in SDRs until you're ready to make purchases, and then you convert it into whatever currency you make your purchases in. So under certain circumstances, as you say, you know, if you're just an American, you never travel, you always live here, obviously you want dollars, you know. But for those who are more international, they may well keep a lot of their SDRs until they're ready to use them.
And I guess negative interest rates add a whole other dimension that we won't have time to discuss, but let's open up the floor to the questions so we can make it a little interactive.
Thank you guys so much, and thank you to our wonderful panel for taking us through this discussion. Quick, before we start the questions, for the first 5 of you who come up and ask a good question, we have Chicago Economic Society t-shirts valued at about 10 SDR each. They're up here, so after you've asked your question, please come up and take one. Pedro will continue to moderate the question and answer and call on you. We'll continue until about 2 p.m.
Please, if you could identify yourself. Or...
My name is Anna. I work for a U.S. institution.
Cool.
So one of the one of the criteria for admission into the SDR is that a currency has to be freely usable. Given what happened to the recent development in the RMB and the increasing capital controls, do you think, I would be interested in the view of the speaker on whether someone made a mistake in admitting the RMB into the SDR basket? That's question 1. Question 2 is, given that it's a done deal, let's look forward. Suppose that the SDR basket contains a very restrictive currency that's not freely floating. What does it mean for the operation of SDR, or what does it mean? Is there any economic consequences to having an SDR that's not really freely floating? Yeah.
She makes a very good point. I mean, it seems like it was almost right after the announcement of the inclusion that people really started to lose faith in Chinese authorities' management of the currency. They seemed to devalue at one point, which the fund described as a move toward liberalization, but then they kind of desperately moved in the other direction. Is there a mistake that was made, or, I mean, you seem to say that the criteria were met, so I assume that that's still your view.
Yes, of course. But maybe let me explain a little bit more. I think, again, when we looked at this at the time and our board looked at this, to some extent the episodes had already happened. I think the first big move in currency came in August 11, when the Chinese liberalized, to some extent, made the exchange rate system more market determined. Markets were surprised by it, didn't know what it actually meant, and the exchange rate started to move quite a bit, and the spread also opened. So a sign of
The onshore, offshore.
and the sign of the restrictions that are still in place in the capital account. So in that sense, I think our board, when they took the decision in November, were aware of it. They carefully looked at the issue. As I said before, a free capital account, that is not one of the criteria. So it is really whether a currency is in fact widely used.
And in fact, capital controls are no longer anathema to IMF philosophy, right?
Well, we have an institutional view that under certain conditions, as a,
Very restrictive conditions.
they can and should be used. I also want to say that, for in the past, we have had currencies in the SDR basket in European currencies that had capital account restrictions as well. We have also had currencies in the SDR basket, the British pound at times, when they had an IMF program. So I think that the economy in China, I think, in this transition to a new normal, to a different type, less export-oriented economy, that ride will be bumpy. But I think in terms of the SDR operations, with the support from the authorities, I think that should be manageable. And I think the board was aware of that when it took the decision.
So to the second part of your question, you don't think it will, you don't think that if they became more restrictive, it would affect the ability of SDRs to be transacted or their usefulness?
I think not really. I think one thing, it's somewhat technical, but what SDR users can do, they can open an account in Hong Kong and they can open an account in mainland China. And they can freely transact in those markets. So transfer RMB wherever it is more valued between those accounts. So in some sense, it is more administratively cumbersome, it is more complex to do those operations, but I think those SDR users should be able to manage those challenges. But it's clearly also not a positive development.
I agree with all of that. What is primarily important to a central bank using the renminbi, holding renminbi in its foreign exchange reserves, is whether it can freely manage the asset counterpart to that, Chinese bonds or deposits, or the other ways in which those reserve assets would be held. And the steps China has taken pretty much free all that up.
Next question, anyone? Come on, t-shirts.
I'm Sarah. I'm a first-year MPP student at Harris. So I like that you touched on the fact that a large part of why SDRs aren't currently a global currency is because of political will. And I was wondering if you could talk about maybe an event that would lead to that political will changing. So like if the US weren't able to make good on its debt, would that kind of change the role of the dollar in the global markets and maybe make way for something like an SDR?
Yeah, I think that's a good question, and at least from my side, I think you need more of an event that could trigger really a fundamental rethink. It is probably a little bit, one element Warren mentioned earlier is this, if you get increasing concerns about dollars. So if dollar is clearly by far the dominant reserve asset, if countries get fundamental concerns, and ultimately that means concerns about the US economy.
Which, by the way, has been, ever since I became a financial journalist, that's been this background fear that never materialized.
Yeah, no, and I see that point. And if you look currently across the global spectrum, I don't think the US looks particularly bad. I mean, there are probably some of the points Warren mentioned, but so I don't see that dollar run happening, but that would be a triggering event, because then it becomes much more in the interest of everybody to think about, how can we get out of dollars without disrupting the whole international monetary system, and then I think the SDR would be resurfacing.
I think that's right. A catastrophic financial event would be the catalyst that would throw the SDR up. Can't think of the guy's name, but there's a book written that says just that recently.
James Ricard's, maybe?
Yes,
James
yes,
Ricard's.
thank you.
Saw it on your blog.
Ah, okay. I should have a better memory.
That's okay.
But the other two things that I've mentioned before, I think that fall far below that threshold, but nonetheless can gradually expand demand, use, and interest in the SDR are for the IFIs, other official bodies, to begin using SDRs and promoting and developing the private market in SDRs. It's just a kind of a very slow, snowballing thing.
Is there any thought or intention of having the AIIB be an SDR?
They chose not
player?
to, but
Yeah.
I'm doing my best to try and get them to change their mind. I mean, these are just political decisions, and if they're interested in this now, they are in a political position to act on it.
Yeah.
So the other is the changing attitude of the United States, where Mr. Trump is pointing to the damage to American labor markets and so on of offshoring our manufacturing. Well, that's part of a consequence of the use of the dollar as an international reserve asset.
Mm-hmm.
So maybe there's more interest in the U.S. of getting out of that commitment. Therefore, more willingness to contemplate an internationally issued reserve asset rather than the use of the dollar. I think those things can ultimately lead to nothing or could be ultimately important.
I mean, I agree also with those points. I mean, maybe just on the private use or use of SDRs in, for example, denominating debt instruments. I think often, especially for the official sector, that may actually make sense. That is more your risk exposure is not the dollar typically, but it's probably better captured by something like the SDR.
Mm-hmm.
The only caution I want to make is sort of twofold. One is it is actually very cheap to replicate the SDR. So if you kind of are really concerned about cross-exchange rate movements, you don't have to denominate it in SDRs, but you hedge.
Yeah.
And that works especially with the current instruments, with the current currencies, has worked very well. I forgot all my...
There have been, in the distant past, SDR-denominated deposits on a very limited basis, precisely because, as you say, hedging it with the basket assets it's not as good as having an SDR asset, but the cost is low. And so it's not prohibitive to hedge your SDR liabilities with a basket of assets.
Well, what about the issue of private issuance and bank issuance? How realistic do you think that would be? And how would that work? What would
I mean, that's what I'm describing, that it's been done.
Okay.
You know,
But what is, it seems like the IMF has the funding to. Are they backed by the bank's assets? Is that what it is, or just like, and is it another kind of a bond, basically?
If the Asian Infrastructure Investment Bank dispersed its loans in SDRs,
I see.
these would have to be private SDRs. I mean, they would have to open up an account with banks denominated in SDRs. The banks would have to hedge those with the five assets in the five currencies, et cetera. The cost is low, not zero. They wouldn't do it without being pushed a little bit. But if the Asian AIIB did that and then dispersed to their counterpart, you know, whoever's getting the loan in the SDRs, like the Bitcoin, the recipients, by and large, for some time, would just convert them into a currency.
Yeah.
But you would have started something that would grow because increasingly they would be able to hold on to the private SDRs and actually pay their subcontract. You know, it's a very slow but potentially steady process if there's a political will that keeps the wind blowing.
Yeah. And I assume that once you hit a certain threshold, then the momentum is self-fulfilling.
Yeah.
Next question, please.
Thank you. Karen Schnell, Harris School, 1994. So we're still out there, which actually means that I was able to remember when what is now the euro was actually originally basket of currency.
Yeah, the ECU.
And it started at the government level of establishing that basket. Eventually it did become private institutions were valuating their trade based on that basket. And then eventually it moved into a currency that individuals use on a daily basis. With the advance of digital currencies, Bitcoin being the most common but also the most joked about, what would it take for the private sector using a digital currency based on perhaps the basket of the SDR to move into an accepted value that eventually becomes something that we all just use? And what would be the implications for the fund itself if it were determined that that basket wasn't quite what the market wanted? Maybe there was a slight twist to how that basket would be revalued. Thank you.
This was it's an interesting question, and when I was chief of the SDR division, I visited the European Commission and discussed what they were doing with the ECU, which is what they called the predecessor of the euro. And they were doing all the things you're saying. They're doing all the things I am now proposing for the SDR. They created private ECU and they pushed it, promoted it, and it was quite extensive before the euro actually came into being. The question of, well, okay, two parts to the tailored basket. One, if the SDR valuation basket, the one of the IMF, is used widely for pricing globally traded goods and commodities, the way the dollar is now, that creates a default for using that unit rather than one that might be better tailored to your particular, the particular composition of your trade as a country. You know, the network externalities of a common unit are very substantial, even if it doesn't match perfectly what the composition of your own debt and trade is. So that's how I see it. But we always ran up against that issue. You know, why would private entities, which are quite free and at extremely low cost, able to construct contracts with any old basket they want, you know, between the two parties to the contract that exactly fits their particular situation. And that's, I gather that's done all the time with an index to a currency. You know, your contract's in dollars, but you index it to things that are relevant to the nature of that contract. So there will always be some advantage to doing that in some circumstances, but the network externalities of a common unit will lead, I think, to a significant number choosing the common unit rather than a specially tailored one.
Yeah, I think this point on network externalities, I think, is a very important one, and I think that is also makes me so skeptical that how you could dislodge the dollar. I think there is an enormous advantage of having one or maybe two sort of major reserve currencies. I think, and that has probably also that advantage of this free transaction.
The advantage you're talking about is the advantage of the global system as opposed to necessarily the advantage of
the
US, right?
Exactly. I'm not exactly. So that I think is just very difficult to dislodge, and like I say, you needed some major event probably to move more away from that system.
And it's likely a decades-long process rather than a years-long process.
That's exactly right. But if there's a political interest in promoting the SDR,
Or there's a will.
then there are many things that can be done at the official level. If I remember correctly, if you lose your baggage at the airlines, the global standard for denominating them is in SDRs. The telecommunications union either did or was going to or thinking about, So these are all official bodies who have to take some global decision about what unit they use, and if there's a sufficient political will, it's quite simple in those cases. I mean, the network externality advantage of the dollar is enormous, without any doubt, in the private sector. But here's a domain where political will can express itself more powerfully and then begin to shift the balance.
Anybody else? I think there's still T-shirts in the market.
I might take one.
I'm Claudia. I'm a first-year MPP student too. I'm just wondering what would be the implications of central banks, for example, in emerging markets, who actually use, we use the dollar to regulate our own currency market, like in our mechanism of auctions. So what would be the implications of maybe not having US-denominated reserves management? Well, reserves, and what would be the implications of the management system within central banks? Like, where do we keep them? The US-denominated reserves are easy to manage.
Would the SDR make it easier or harder for emerging markets to manage their capital flows or their currencies?
This is exactly why I started giving importance to the development of a private SDR market. If that market is sufficiently developed so that it has anything close to the liquidity of the dollar, close to the range of SDR-denominated assets that reserve managers can hold their reserves in, et cetera, then it has the advantages of the dollar.
But if it's kind of clunky and hard to use, then it'll
Yeah,
just
and
be...
under the current rules, what I think you have in mind wouldn't work. So you cannot use the SDRs as an intervention currency with a private sector. I mean, the private sector is not allowed to hold the official SDR. So there you always
Hence your point, right?
would have to go through these steps. Exactly, you needed a
Hence you need the
different
private
system.
issuance.
Well, there's a two-step process that achieves that. If a central bank wants to intervene, it can hold official SDRs, and so that can back its SDR-denominated private intervention in the market. None of these things are impossible. They just don't happen on their own because of inertia, given the great advantages of the dollar currently. I mean, the dollar has the inside track where all these things are easy, but that balance can be tilted.
Anybody else?
Matt Shesky. Has there been any literature published about taxation or any legal aspects to the SDR for eventual private use?
That's a very interesting question because the issue is very much under review with regard to Bitcoin. Is Bitcoin a commodity? Is it money, or for tax purposes? So I don't think that question is settled, but it's an important question because, maybe I can rely on Judy. You're a lawyer, on some legal input, but clearly it's an important question that would have to be addressed. But most tax issues don't have to do with the currency. They really have to do with the standards of measuring profitability or income per se.
Sure. And when SDRs are issued, where are those accounts domiciled?
The official one or the private ones I'm talking about?
Well, the official ones now, and where I'm going with this is that you have epic cash reserves, in Ireland and other tax havens, sitting there growing with S&P 100 companies, where they have liabilities that are probably somewhat close to the SDR distribution. Would it not be a maybe ideal way to get into the private market by allowing those companies to buy SDR denominated debt, which is much higher yielding than maybe any one of the original currencies they have? And then where I'm going with that is, could they not move the money across country lines without having to pay tax on the repatriation of profits?
Well, I think
It's a triple iris.
yeah, I think that mixes the issue of how to treat corporate income and the transfer from one jurisdiction to another, which again has nothing to do with currency. So that issue is there, whether you're talking about dollars or euros or SDRs.
So you can't avoid the taxes on the currency play.
Yeah, actually one of the stupidest, most pernicious, ridiculous taxes in the world is the corporate income tax. It's a double tax for starters. It's impossible to monitor in a virtual world operating on a global basis. It simply ought to be done away with, and be sure that the owners and the workers, pay their taxes properly. I liked to think, when I was chief of the SDR division, that the domicile for the SDRs was my office. Literally, the official SDR is allocated by the IMF is a somewhat intriguing process of recording on the books of all of the IMF members and then a dozen other holders, like the BIS and so on, World Bank, putting on their book, when there's an allocation, the amount that's assigned to each member goes on the asset side of their books as an SDR asset, and it earns interest at the SDR interest rate. On the liability side, they get exactly the same amount of SDR liabilities on which they pay a charge of exactly the same amount. If they do nothing, it's a wash and they can forget all about it. If they use some of those SDRs, then the interest they're earning falls below the charge they're paying, so they have a net interest payment. But those are all domiciled in the books of the IMF. But also they will appear, the asset and liability appear for each country on the books of its central bank.
Great, thank you.
Anybody else? All right. Thank you so much, guys. We'll leave it at that. We'll thank the two panelists.